before the budget, I had commented that Honorable Finance Minister will have to behave like Amrendra Bahubali. In that epic movie, Bahubali from one bow shot multiple arrows. Market was expecting Finance Minister to achieve multiple targets with one budget. On one side, there was expectation that growth multiplier will be created by enhanced allocation to infrastructure. Private investments will be revived by ease of doing business. And subdued consumption will be supported by some fiscal measures. At the same time, Street was expecting Finance Minister to pursue the path of fiscal prudence. It is extremely commendable that Finance Minister in real life has acted like Bahubali. On one side, she increased growth multiplier through infrastructure investment and consumption boost through tax cuts. On other side, she showcased path of fiscal prudence. This budget is in some sense Kal, Aaj or Kal budget. It is continuing work of building infrastructure which we should have built yesterday. Infrastructure built between 1947 to 2013. Almost similar infrastructure is built between 2014 to 2024. Lack of infrastructure constrained our economic growth. Now, by building in 10 years what we had built over 67 years, we are freeing our constraints. In 2013, we had 80,000 kilometers of national highway. By 2024, we'll have 1,65,000 kilometers of national highway. Our power capacity was 2,25,000 megawatt in 2013. It will be 4,35,000 megawatt in 2024. We were mining 600 million tons of coal in 2013. We'll mine 1 billion ton of coal in 2024. This rapid buildup of infrastructure is correcting our yesterday. We put our entrepreneurs in Chakravyuh. Like Mahabharat's Abhimanyu, it fights with Kaurav, which is volatility in business, global competition. But it also fights with Pandavas in terms of higher compliance burden. In this budget as well as outside of budget, government has worked on improving ease of doing business, and this is again correcting our yesterday. The budget has focused on our Aaj by pursuing growth multiplier, by giving boost to consumption through 35,000 crore worth of tax cut. This tax cut could have been higher, but it needed to be delivered within the constraints of fiscal prudence. India is the only economy in the world which has improved its debt to GDP ratio from subprime crisis to COVID crisis. Our premium equity valuation is dependent upon our path of fiscal prudence. And this budget has reduced fiscal deficit by 50 basis points in this year and targeted reduction of another 1.4% by 2026. Finance Minister is truly managing two conflicting objectives of growth with fiscal prudence. The budget is also focused on tomorrow. It is focusing for green energy by giving resources for hydrogen. We are securing energy independence. There is tremendous investment in skilling our youth so that they can be prepared for future. This budget truly corrects our kal, supports our aaj, and prepares for aane wala kal. This is the budget which, within all the constraint, has delivered conservative revenue estimates and realistic expenditure estimates. Let me take the liberty of recommending something for your individual portfolio. You need to consult your investment advisor before following on these recommendations. If you are a salaried employee, please renegotiate leave encashment policy, as exemption in leave encashment has gone up about 6 times. As a salaried employee or professional, please consider investment in NPS. It is one of the most cost-effective pension service offered in India. If you are an investor in market-linked debentures, do consider selling before 31st March 2023 to retain tax advantage. Obviously, you need to consult your chartered accountant before taking that decision. If you are going to move from old tax regime to new tax regime, then re-evaluate your investments in provident fund, public provident fund, voluntary provident fund, equity-linked saving schemes, or insurance policies for non-protection purposes. Now, there won't be any tax incentive on these investments in the new tax regime. You will be free to invest this in the assets based on your risk profile and investment objective. I'm sure equity mutual funds and asset allocation funds will find suitable evaluation from your side. There is a correction in REIT and InvIT units based on changes proposed in this budget. I still believe, despite this correction, REIT and InvIT requires consideration for your portfolio allocation. Equity market is buy on dips market. This is a market where there will be significant volatility in the days to come thanks to Russia-Ukraine situation, US Fed pivot, earnings calendar results from Indian corporates, and expectation of election. This is the year where there will be volatility because of events like US Fed pivot, Russia-Ukraine situation, energy prices, earnings from corporate India, and expectations about general election in May 24. This is buy on dip market. A disciplined and a long-term investor will outperform the market. We believe this is also appropriate time to build duration on fixed income side. It is likely that longer maturity, longer duration funds like gilt and bond fund will outperform shorter duration funds over next 2 to 3 years. From a thematic point of view, manufacture in India theme looks attractive. In mobile phones and toys, we have moved from being net importer to net exporter. The same feat will be repeated in many sectors thanks to China Plus One and improvement in our infrastructure. Stay safe and stay invested. While the near-term journey in stock market will be volatile, every correction will provide an opportunity to participate in exciting India growth story on a long-term basis. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.